Well, this is it. The week that the markets have been waiting for the entire year. And in today's Forex market preview video, I'm going to share with you a trading opportunity that needs to be on your radar heading into it. Hey guys, welcome back to another Forex market preview video. My name is Akil Stokes, currency analyst and Forex trading coach over at TradingPower.com. We are inching ever so close to our goal of obtaining 100,000 subscribers on this YouTube page. And I just want to give you guys a big thank you. The way that we do that is really you guys, right? You guys getting out there and liking these videos, leaving positive and informative comments, and of course, sharing this with your trading community. So keep it up. We're about 10,000 subscribers away, and hopefully we can get there before the summer comes. Now, this is a very important week in the market. We have a very high potential interest rate hike coming for the US dollar this week. I believe it's Wednesday or Thursday, one of those days. I think March 15th, whatever day that is. So not really sure what to expect for the market. I'll get kind of into my fundamental views in a little bit, but what I want to share with you guys today is a trading opportunity that you can look at in anticipation of the week ahead. So let's head over to the charts and let's check it out. All right, traders, so we're looking at the Aussie dollar here on the daily chart, and the first thing I want to do is just gain some perspective on what the market is doing, what the market has done. What is my higher time frame perspective, my higher time frame view of this market? And what I want to do here is either stay on the daily and just scrunch up my charts really small. You can also go to the weekly and capture the same type of thing. But you'll see that price action has recently been in a period of consolidation. If you are new to this channel or never had a chance to see any of our training, a real simple way, I guess I should say this, the market moves in three ways. The market moves up, it moves down, and it moves sideways. A simple way to view that is when the market is in a bullish trend, right? You'll see it move from the bottom left to the top right of your screen. When the market is in a bearish trend, as in previously, you'll see the price action move from your top left to the bottom right of your screen. When we're in consolidation, the market moves sideways. You can see that recently we've just been creating equal highs here, right? And these things are zones. They don't have to be perfect, but equal highs here and equal lows. So we can call this sideways movement. And essentially what this means is I don't have an acknowledged trend on the higher time frame. I don't want to go into my lower time frames and say that we are really bullish or we are really bearish. We're right in kind of a neutral zone where we don't know. And you just want to keep that in the back of your head, especially for stuff like target taking. Now, does that mean that price action can't come down and retest these previous structure lows and we continue this channel? Of course, this can happen, but we're not as sure about that, so we may want to be a little bit cautious when it comes to target taking. Now, as we go down to a lower time frame here, or I guess I should say this, let's start here on the daily again, because this is a very valuable lesson. Can you guys see what has occurred within this consolidation? I'm going to zoom in your chart a little bit for you. All right, let me know if you can see it. All right. We actually had an advanced pattern formation here. We had a cipher formation. I'll draw it in for you. I'll cheat and use our Polaris, right? If we take our X leg right up here, right, you'll see that we had a bearish cipher formation complete kind of recently. Now I say kind of recently because this pattern formation actually completed at the beginning of February. Yeah, or actually the beginning of February, end of January. And this was something that a lot of our traders were in, and you can see price action just did nothing but slowly torture them for an entire month, meaning we went sideways to up for an entire month before coming down this past week and finally getting our traders profit targets hit right here at 75.16. And this wasn't the original idea for this video, but this brings up a really good point. in trading, we like to say something that patience pays, literally, because it really does. And if you've seen my video statistics on why most traders fail, the reason that most traders fail is because they sabotage themselves. They get to a point where the market has caused them so much pain that they finally give in and they get out for a loss or whatever it may be. And this was a really good example. Again, traders entered this trade originally at 76.45, right? And over a month span, right, they basically sat here and watched themselves be 100 pips down, right, as the market did nothing. And they're sitting there every day. They come down, they look at their chart, and it tortures them every single day, And my guess is that so many traders, right, maybe by the time we got halfway through, a few days or a few weeks in, would have scared themselves out of the trade. If you're a trader that was in this trade and did that, feel free to leave a comment below. I think it's going to be great to see how many traders actually kind of gave in and punked out, and how many traders stayed with it. But for those who did stay with it, they were rewarded in the form of about 125 pips of profit. And more important than the profit made, right? Profit is great, but you'll forget about it as soon as the next trade comes. More important than the profit made on this trade is the valuable lesson that was learned, right? That's going to have the lasting impact. For traders that stuck with this trade, right? That feeling, this trade is going to be stuck in their mind forever. And I'll tell you what, there is going to come another point in time where you have another trade that goes sideways or another trade that causes you pain. And when you have the belief that, hey, it's all right, I did this before, I stuck with it, I stuck to my rules, I didn't bend, I didn't break, and I was rewarded, it's going to give you that much more confidence to do it again in the future. And if you want to become a consistently profitable trader over time, it's not necessarily about who is the best trader and who's finding the best trading opportunities. It's who can deal with the most pain and stick to their guns. So, hats off to you guys that took this trade. We've been talking about it all week, but this is going to be one of the most memorable trades that you have in your life. And hopefully it sticks with you and allows you to be a much more disciplined trader in the future. If you were a trader that got into this trade and you exited out because you got scared only to wake up and see that you would have hit profits if you stuck to your guns, well, this could be a learning opportunity too. What I want you to do is take a picture of this trade, print it out, put it right in front of your trading station, right? And let that be a reminder of what happens when you break your rules, right? Let that be a reminder of next time that, hey, I broke my rules, I missed out, I never want to have that feeling again. So pretty cool opportunity here. So back to the trading program, essentially. Let's go down to the 240 chart, or 4-hour time frame, and let's take a look at what price action has recently did. Now, you can see here, maybe I should have stayed on a daily. It doesn't matter. You can see here that price action came up, right? We had our cipher formation. We were in a very strong uptrend here. Give me a second here. This is unprofessional, but I don't care. Let me mute this bad boy. There we go. All right, so you can see that price action was recently in a very bullish move, right? We actually came up all the way from about 71.50s all the way to about almost 77.50, so nearly 600 pips up. And then we recently, you can see price action came up a little higher. We started to lose momentum, right? You see the market start to kind of go from a very steep angle to start to climb, but slower before finally falling off and giving us a new structure low, right? So we break and close beneath this channel essentially. Price action has then done this, right? We've put in a retracement and we put in another new structure low right here. Now, this is going to set up a trend continuation opportunity, meaning for someone that is interested in getting on the bearish trend, what you want to do is you want to draw out a zone, and your zone is going to come from your previous structure low right here to the top of your outside return. And this is your potential reversal zone, or as the traders I work with like to call it, the Akil zone. Get it? Ha ha ha, Akil, my zone. Nah, we're funny, right? But this is the area that you're looking for a trend continuation opportunity at, and you're looking for price action to continue lower. Now, There's been a lot of talk about the fundamental side of things recently. I don't typically get into it in these type of videos, but I think it's important because, we do have a big week coming up. Now, I mentioned on Friday, we did a large Q&A on Friday. I mentioned on Friday, I perfectly predicted the reaction to our non-farm payroll, right? I said, guess what? The market has essentially priced in the interest rate hike, right? That's been priced in. Again, smart money is always in before the rest of the herd gets there and they get suckered. So price action has already, or smart money has already priced in, or the markets have already priced in the interest rate hikes that are potentially coming. And I predicted live, right? If we do get a positive number, right, a positive jobs number this past Friday, you'll probably see this, right? You'll probably see a very, very quick movement, pro dollar, bullish dollar, because everyone's thinking, oh, good number, good news, interest rate hike coming, let's buy dollars, buy dollars. And then you'll see those suckers get stop hunted or whatever you want to call it, eaten alive, and you'll see the market reverse. And that's exactly what we saw. You can see we had a very positive number out on Friday, yet across the board, we saw dollar weakness. Again, this is the Aussie dollar pair, Australian dollar pair. So when price action is moving bullish here, that means bullish for the Aussie, bearish for the dollar, right? And this pair is an interesting pair because there have been some, just as there have been some very, very positive news for the dollar, there has been very negative news for the Australian dollar. And again, it's priced in that this week there's going to be an interest rate hike here in the dollar. The Australian bank has come out and said we're not going to do anything with interest rates, right? So on the fundamental side of things, everything is stacked towards you should buy dollar, you should sell Australian dollar. So you would think that there would be a bearish confirmation bias on this pair. And if you want to be a little bit of a conspiracy theorist, right, if you're thinking that maybe the markets are showing dollar weakness just to trap the traders that don't know any better so it can give them cheaper buying opportunities for the dollar once that interest rate hike does come, then this may be a situation that works for you, because a bearish trade here, right, a bearish trend continuation trade here would have you buying dollars, US dollars, and have you selling Australian dollars. Now the question is, if we are going to continue lower, where are we likely to go? And that's when I want to go down to, or go back up to the daily chart. And when I want to think like the other trader, right? I want to look at previous structure and ask myself, where would the bulls be interested in again? Now the first level was right here, right? We see this level, and this is where the market kind of held and started reversing, right? Again, we look at previous structure, resistance right there, previous structure, resistance right here, resistance is broken, resistance becomes support. Let's go ahead and delete this line, right? Price action spikes up, we come back down, price action finds support again. If I can get my right arrow going, boom, we come up, we come back down here, find support once again, right? The next level, if we can break this 75-cent zone, is going to be, or in my opinion, is going to be right around here, right around about 73.50. It's a little bit lower than that 73.50 level. Let me just go back. Yep, and you can see the same type of action here, right? You can see price action consolidates, just follow the red line. We consolidate, we see resistance, 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 resistance broken, a little bit of support right here, right? Come back up, break below, comes back up, finds resistance, gets above, comes back down, finds support, finds support, finds support. And you can even see a little bit of consolidation around this area in the past as well. So if price action is going to continue lower, ultimately this is the level that I would think we're going to go to. So you want to keep this in mind, and different traders are going to handle this type of situation differently, depending on if you're a true trend following trader or if you're just more of a what we call a trend continuation trader, where you're taking more conservative targets. If you're a trader that's aiming for this point down here, this 200 pip move or whatnot, then guess what? You can easily enter right now on this first test, get stops above the previous structure highs, right? And you'll easily have a positive risk reward. You should have about a 3-to-1 risk reward. Let's go measure it out real quick. Let's go, where is red? R, there we go. Let's take our risk, looking something like that. You can even stretch it out even more if you want, but keep things short and sweet for today. Here's your potential reward. right? And you can enter at market. If you were to go down to, say, the 60-minute chart, you'll see we double topped at that level. This is going to be, right, the first chance for entry. It was actually on the Friday close. Maybe we'll trade up a little bit in that level again. But this line, if you remember, is the first chance for entry. And you can have very, very wide stops and look for very, very wide targets. Another option would be to still take it at this level, right? But instead of having those wide stops that we looked at on the daily, right, have very, very short stops right above this double top. Now, there's pros and cons to both of these tactics, these techniques, and that's the thing about trading. We get a lot of newer traders always asking, well, Akil, what is the best way to do it? What is the only way to do it? And everything is a pro and a con, meaning everything has a give and a take, right? If you do the first way we talked about, guess what? You have a massive risk, right? You also have massive reward, and you have a much safer chance of not getting stopped out because stops are above your previous structure. If you do it this way, guess what you have? Well, you have a much higher potential of being stopped out, especially if the market decides that, hey, this is not going to be a reversal point, right? Let's say we're going to do something like this. If you guys watched my video a few weeks ago, you know that a move like this is called what? Complex pullback, right? You have a much higher likelihood of being stopped out, right, and being wrong, but you also have shorter risk on the table. So you really have to define what type of trader you're going to be and how you're going to consistently enter these trading opportunities. That way you can really work your strategy around you. You know, a trader like this, right? Let's give this as an example. Let's say you're not a trader that takes these very aggressive approaches, these kind of first touch approaches right here, right? You may see this, you may get involved, you may get stopped out, and guess what? Now you're crying, you're mad, you're upset, the market does this, it then rolls back over, and then, I was right, but I didn't get a chance to be in the trade, I missed it. Whereas a trader that took this opportunity, they understand the risk. They say that, you know what? I understand that I'm going to have a very tight stop loss. I understand that the market may whipsaw me out. I also understand that if I get stopped out here, I'm going to look for another entry opportunity here. I'm going to look for another entry opportunity here, and I'm going to keep doing so as long as price action is in my kill zone and as long as my overall analysis hasn't been changed. And that trader may take a couple of losses, but they get that one big winner, and guess what's going to happen? That's going to make up for those losses. So I hope you guys see that not only does how you enter this trade depend on what type of trader you are, but the importance of being consistent in how you attack the markets. Because if you're not consistent, you're really going to be on the opposite side. You know, one time you're going to do this and you're going to get burnt, and you're going to switch it and try to do this next time and you're going to get burnt. And then you're always one step behind the market, which is where you don't want to be. So Aussie dollar this week, this is on my radar for a potential trading opportunity. The safest target's going to be at a retest of previous structure lows, obviously here. But if we do continue lower, I think we can make our way down really to that 73.50 level. Probably find a little bit of support right up here at 74.50s as well. But for you guys that are trend continuation traders, definitely put this on your radar, as I think it's a good opportunity to get short for this week. So if you like seeing videos like this and you want to stay more in the loop and really get some insider access and see what we're watching on a daily basis, I recommend checking out our syndicate program, guys. We still offer the month-long trial for just $1. That means for a single dollar, you get a month worth of war room meetings. You get a month worth of trading ideas shot through the trade floor. You get a month worth of videos. You know, so instead of waiting for just one video a week on our YouTube channels, right? Track what we're tracking each and every day in the markets. I don't think there's a better deal than that. If you don't like it, guess what? All you've done is wasted $1. You've probably wasted a lot more than that in the markets, would be my guess. So head over to tradingpower.com and you can sign up for that trial. And I look forward to seeing you in the syndicate. For the rest of you guys, I look forward to seeing you next week with another episode of the Forex Market Preview video. Again, I appreciate all of your hard work in getting the word out to your communities. We're close to 100,000 subscribers. So close, I can feel it. And with your continued support, we'll get there sooner than later. So As long as you continue to like, subscribe, and share, we will continue to produce this content for you each and every week. And until next time, plan your trade, trade your plan. Good luck in the markets this week, and please be safe. Hey traders, welcome back to another Forex market preview video. My name is Akil Stokes, full-time. All right, so thank you once again for us for a while as well. It's just a different view of things. That have been with us for a while as well. It's just a different view of things. All right, so thank you once again for joining me. All right, thank you once again for taking the time out of your weekend to join me for another. All right, so really take a little bit of the focus off the education and focus on myself. You know, Hey traders, welcome back to another Forex market preview video. If you are new, my name is Akil Stokes, currency analyst and head trading coach over at TradingPower.com. And this is a weekly video that we've been putting out for weeks and weeks and weeks. Racks on racks on racks. And this is a weekly video that we've been producing for years and years and years. That just sounded dumb. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our TradingPower.com website, or also take a look and you'll see more videos available for you. Have a good one.